Good morning, everyone. It appears like I'll be the only one on the broadcast today. I'm not sure each of my colleagues, so to speak, got whatever else going on. So here we are. And quick review of yesterday. If you have PTSD about yesterday, actually, let me go to my plan write-up. I'll give you the brief version of it right here. Let's do it on this so we could kind of see where the breaks are. So this is without, not the continuous. So basically we opened yesterday right near the high, 69.90 and change. And then VIX, volatility spiked, not just VIX 9-day, every volatility measure spiked. And then it was just down goes Fraser. We just ate through whatever levels were there. That volatility just kept ramping up. Past 19, I don't remember if it got to 20, it might have. And volatility stopped ramping. Deltas that had expanded started contracting, and then the hedging that happened during the sell-off started to get unwound, and then we just had basically a reversal, as you can see. When I get to the screenshot, not the screenshot, when I get to the options depth, I guess show you a couple of things that happened yesterday that I thought were really interesting. One of which was the selling of the 6,900 puts. That was positive gamma. That was supposed to be support, quote unquote. And then as we were going down, they kept selling more of them. They kept selling more of the 6,900 puts when we were below 6,900. So that's a lot of positive delta coming in that had to be hedged by market makers selling. Then as we turned around, suddenly they had to start buying that back. And as volatility came in and deltas, the negative deltas contracted a little bit, we got this crazy thing. I thought they were nuts. Maybe they were crazy as a fox. It was like 20-something thousand of them at one point. I see a comment. Oh, a good morning comment. So anyway, sorry I'm late. So that's what happened yesterday. So here we are now. Let me pull up the post. This way it's somewhat structured. Okay. 68.70 to 69.93 range. Okay. Kind of a crazy range. We ended up closing within the expected move. How do you like that? 69.90s, and then VIX ripped from 16 to 19.75, and we showed it yesterday here. I think we spoke about it in my Discord room. Market makers are short VIX calls, customers long VIX calls, 17-ish through 20-ish ladder. Aloha from Poland, aka Hawaii. And so we had that dealer hedging the the negative gamma of the VIX calls on top of whatever was going on. So it was just beautiful. And yeah, then the whole pattern yesterday was a fishbone. When I say a fishbone, I mean long, short, you know. After the bell, Apple beat and everything looked good. Okay. So here's what happened. Vol spike, dealer hedging pressure flush under 6,900, then vol collapsed. I don't know if it collapsed, it turned around. Hedging reverse, rip back up. That's not poetry, that's the flow. And that's the truth. Ain't it the truth? Okay, so now the VIX decomposition index, which I typically show, doesn't really tell the story because VIX was only up 0.53. Oh, nothing happened in volatility. See, nothing happened. A little, call skew went down a little bit, put skew was flat, a little increase in downside, upside convexity, a little shift based on the vol surface repricing, but that doesn't tell the story. Most of us kind of lived through this yesterday, and that's not what happened. So just to try to briefly frame what happened, let's look at a few volatility metrics. Okay, let's just look at this. Keep it simple. Okay. And VIX is back to 18 again, just FYI. So where was yesterday? So okay, so here's yesterday. Sub 16 up to 19 and change, and VIX reverse and SPX reverse with it. Oh, Bad Hombre is here. I thought he wasn't going to be able to. He said late start. Okay, I didn't know the late start meant that he would be able to be here after all. Yay.
Good morning, everybody.
So I'm going over the volatility. So in volatility, so now what else did we see? As has been the custom, the VIX 9-day, the short term, spiked more than the VIX. Where was it? Let me get the right day. The VIX 9 days spiked more percentage-wise than the VIX. So it wasn't higher absolute value-wise, but it spiked more percentage-wise, indicating what? Indicating more short-term fears than long-term fear. However, there was long-term hedging too, or long-term bid for volatility for VIX as protection, as evidenced by the VVIX spiking to 112, 110. So now VVIX is back down to 100. VIX closed near 16 and change, almost 17. Now VIX is back up. As I said in my note, volatility tends to cluster. These volatility events tend to cluster. So we might have a little bit more 16 and a half, 18 and a half, 17, whatever, until we kind of settle in. The other thing that happened, and we were looking at this in the room, tail decks, 3 standard deviation out of the money demand for protection spiked more than tail decks spiked more than, let me just put T decks over here. Where's it? Then T decks. T decks is 1 standard deviation out of the money is 20 delta standard protection. This spiked more percentage-wise. Vol-I, the surface volatility, the at-the-money volatility, spiked percentage-wise the least, if I remember correctly when I was looking at yesterday. Okay, so there was a reach for hedges. That tends to make me cautiously bullish, not maybe for today, just like we saw during the invasion of Greenland when volatility, that was a joke, when volatility spiked, and then, we had a day or two of craziness, and then we had all that potential energy of the, more extreme hedging because the deltas of the puts are higher than negative deltas, so they have to sell more to hedge. They have to buy back more when that just doesn't realize. It's typically potential energy, as we saw yesterday, a microcosm, as we saw last week, where we went to the all-time highs afterwards. So I'm not saying we go to the moon today, although we could. I'm saying that I like it when I get these VIX spikes. It's a setup, maybe for not today, maybe for next week, but it tends to be a setup. You have to be cautious, which I'm not famous for. Okay. And so with this whole thing, we had a parallel-ish, we'll call it, move in the VIX futures. And so the takeaway for that is there's no takeaway. There was no, what's the word I'm looking for? Dislocation of VIX futures versus the VIX, whatever. There was nothing to see here. Everything acted like it was supposed to. I'm stuck here in the VIX. Which one do I got here? Okay, so I want a quick look at dispersion and all that. Okay, PPI revised down. I don't know if they like it or not. I guess they don't. I don't care. PPI fresh dry vegetables. Oh, PPI they should like, right? Revised down means stuff costs less. I don't know if it's good news, bad news, and we'll get to the Fed in a second. So with the pullback yesterday, okay, so look what happened to correlation during yesterday's sell-off. Correlation spiked, baby with the bathwater. Everything goes down together. We all go down together. That's a line from a song. I'm not sure what song. Maybe Chewy knows. We all go down together. Anyway, so constituent vol is high. We still have earnings. Dispersion is actually coming in. So far, nothing looks like it's going to break here, but we're back down to 8, so we'll see. We're a little low here. Not horrible, but a little low here. We're kind of scraping the bottom of the barrel, but we tend to do that when we go up. So nothing there. All right, let's get back to the videotape. Okay, so what happened? What shook the tree, as I said? Iran headlines heating up, weekend wires, and, Iran's bolstering its defenses, and we've got Navy ships cruising in there and all that kind of stuff. Gold is acting nuts, technical term. Gold volatility spiked to the highest it's been since Pharaoh, and silver is parabolic on the chart, and silver volatility is 200%, whatever. So this whole cross asset thing is going nuts. We got Japan in there. we had the FOMC, and dollar weakness firmed up temporarily, but there's talk about the dollar is just going down, down, down. So de-risking American assets, dollar-denominated assets, and all this kind of stuff going down. Oh, actually, preview. So Gundlach was on after the FOMC, as he usually is. You usually don't see him in between, only once in a while. And he spoke about his thesis, as it seems, and he tends to be right. When I listen to him, which is not too often, I don't play in the same pool he plays in. But a few years ago, he said, buy 2-year treasuries. I did. for my kids, not for me. And that was a great trade. Anyway, so I'm saying that to say this: his 2026 roundtable is out, and I checked it out, and I made some preliminary notes. And so my weekend thing, I'm going to kind of summarize his roundtable a little bit, and then Doc McGrawify it and come up with some ideas based on what he says. If you think he's right, you could do them. If not, you don't have to do them. And it'll just be kind of some ETFs and some stocks and how you might allocate a portion to your gun lock portion of your portfolio. Anyway, government shutdown, well, all that bullshit. Okay. So we had Apple beat, we had these guys, we had let's get back to it short with stock traders, right? We had all the usual suspects, the recent momentum names. We had ScanDisk. Do I have ScanDisk on my? Okay, I don't have ScanDisk on. I'm not going to bother answering. ScanDisk and Western Digital. I should have Western Digital here at least. I know. I say WDC. My list of 40 stocks is now about 60. So we had ScanDisk, we have Western Digital and ScanDisk report, memory. So now it's memory, the subsector of the 70s. On the other side of the sense, we had KLA 10 core miss. This morning, I think we had ExxonMobil. We had other stuff this morning. I'm not sure, but my point is really not to highlight individual names specifically, although we know Apple is important. We know ExxonMobil did weight. I think the diamonds might be a good trade today based on Apple and maybe ExxonMobil if they perform well. UNH, which is a big weight in the diamonds, and the Dow got beat up. It seems to be trying to stabilize. So an intermediate, for me, intermediate is 2 weeks, into Feb OPEX, end of Feb. A bullish diamond trade, cautiously structured with some kind of cheap fly, might be something to look at. Okay, so this is coming in from crazy. Okay. All right, I'll get back to the rest let me finish the rest of the SPX roadmap. Oh, I forgot to put the other thing in there too. Oh, well, okay. And we're just going to cut to the chase and come here. Okay, so where are we now? We're at 69.30-ish, right? We're right here. Big positive gamma strike. Now, these are sold calls, okay? Guys, let's remember that. These are sold calls. The market makers are long these calls. So we have 69.30 to 69.50. Not that big of a whatchamacallit, not that large of a gamma strike, but we have this zone, 69.30 to 69.50, kind of the immediate action zone. Notice we have a fishbone pattern. Everything, of course, and if anything, we're dominated by negative gamma, not positive gamma. What does that mean? That means the pain in the ass to trade. That's what that means. And so if over 69.30, 69.50, round number, we have some positive gamma. We should stall there. We kind of stalled there in the pre-market, if memory serves. And we have this negative gamma here, bouncy. If we get over 69.50, like we did yesterday, negative gamma ladder up to 75, fruits and ladders. Remember the game when you were a kid, fruits and ladders, you climb up the ladder. then you're going to shoot to go down the ladder, shoots and ladders. We have shoots and ladders here from 55 to 75. I know I talk fast, so you have to listen fast because I think fast. What movie is that from? I talk fast because I think fast. I've asked this before. What movie is that from? I'm waiting. What movie is that line from?
Don't make me cut in and say it.
Okay, I'm not going to waste 30 seconds. Okay, True and Tell It.
From Pulp Fiction.
Pulp Fiction. And for extra credit, what's the name of the character who says it?
I know the actor, Bruce Willis.
The actor wasn't Bruce Willis.
Oh.
It was Harvey Keitel. Harvey Keitel, and the character was the wolf, who was the cleaner, who got called to clean up the mess. But okay, you got the movie, so you get partial credits. Okay, so anyway, I thought it was a great line because I identify with it. So if over 69.50, we have this shoots and ladders up to 75, round number, previous all-time high zone a couple times. So nice place to stall. That also happens to be the expected move. When I looked before, was right up in there. Okay, now if by some miracle we get over 75, which we could, then yesterday we had two miracles. It was a Festivus miracle yesterday. We get over 69.80. We got this little stuff up here, more fishbone-y stuff. Over 7,000, 710, new all-time high intraday, a bridge too far, not likely, but you never know. And we have this 70, 10, 15 kind of fly-looking structure with all this stuff on top. To the downside, below 69.30, it's really no bueno. Below 69.30, we got we have shoots and ladders down to 6,900 again. PTSD, rinse repeat of yesterday kind of action. And let's just extend this down and let's give the bull some hopium. Let's see what's going on underneath. Not much. So underneath the 6,900 big negative gamma strike, which is a potential accelerant down. And when we, just like yesterday, although the 6,900 strike was different, that's not my point. It's a potential accelerant down. And if we don't get there, if we stay somewhere here, and as these deltas erode, as these go from a 30 delta to a minus 30 to a minus 20, whatever, market makers buy back the shorts that they have to hedge this, and we turn around the other way, and we get a classic, let's just pretend we're over here at 69.15. We get a classic, this decays, and they buy, and we get sucked up toward the positive gamma strike. We don't get through it. We kind of end up here. So if we're above 30, and this is still here, excuse me, we can get sucked to here, but if these decay, that pushes us down. So we have that end of day charm dynamic that's going to come into play as well. 8:56. Let me see if there's anything else brilliant on my note. I want to make sure. Overnight undercut 6,900 bounce, 25 points. War. Trump announced his appointment, Kevin Warsh. I think the market likes it. I think that was part of what contributed to the bounce. And now the talking heads and the gurus are going to have to pontificate. 10-day range, 1,790 to 7,000. Week to date, yesterday low 68.70 to 7,000. 20 DMA 69.20. I watched that. 50 DMA 68.50. So far, so good. Okay, I went through pretty much everything else. Only other thing I'm going to say is, unlike in October, November, when, and also last year and during the April sell-off, when hedge funds, CTAs, etc., had to delever, according to, and I read a few different reports, although funds, systematic funds, CTAs, etc., are 91% allocation or whatever, most of the risk models say they don't have to really, they're not going to really lighten up until we're like 3-4% lower, until we're like down at a level that we might not get to near term without some help from an exogenous event. So that's that. Okay. Oh, and we have pension rebalancing. And what I read, and I don't know, I don't get pension flow information, is that there should be buying, and we have that today. So with that all as a backdrop, everything is clear as mud, from the fishbone to the countervailing forces to the going into a weekend with the pending military action in Iran. And so with that clear picture, I'm going to let Bad Hombre tell you what's going to happen.
Okay, guys, I don't have my chart ready for you right out the gate, so if you could pull up ES for me, Doc.
Okay, let me pull up ES, yeah. P. And this is yesterday. Let me just ignore the lines and stuff, because this isn't today's. I didn't put it in. I think you're going to be here. Okay, go ahead.
Okay, so first off, usually when I look at a chart, I'm either 60% bearish, 70% bullish. There's always a weight to one direction. Not saying that I don't prepare for both sides. I do. That being said, today feels very 50-50 in my read. And that to me is a little concerning. So the way I trade that is I try and trail my stop and profit a little bit more conservatively, instead of trying to let the trade breathe until I see clarity with one side or another. My range for today is between 69.70, let's call it 69.80 down to 69.55. My pivot for the range is going to be 69.60. So
that's where we are right this second. That's where we are right this second. So we're 69.60. What do you do?
Right here, what I do is wait.
Oh shit, man, that's no good. Go ahead.
I'm waiting for either a break below that 69.55 or a push above. Right here, I'd probably take a long up to 69.75, the top of my range. But I'm not expecting a break above or a break below, just kind of range trading for now. But if we do break below that 69.55, I see an easy way down to 69.10.
Wow. Okay. So your convex move is to the downside, but neutral bias, and you might. Okay, I see. Okay.
Mm-hmm. And if we can't hold that 69.10, 69.80 or 68.80.
Whoa, 68.80, man. That's 68.50 SPX. That's the 50-day moving average. That's the big strike. That's Okay. Well, let's hope that doesn't happen. We also had gap fills around that area last week, and we undercut it, and we went to that 67, 80, 90, whatever it was. So yeah.
So interest isn't dead just yet, right? Or dead there just yet. So that's the downside bias with a bounce at 6,900, obviously. 69.10, 6,900, that's another bounce zone. But that I think is going to be short-lived. If we can break above 69.77, 69.80, I'm looking for a quick trade up to 69.90, but trying to hold all the way to 7,010 for a reject.
Okay, so given the pullback we had in the overnight session, we are not at yesterday's close yet. How do you factor yesterday's close in as a target for the day or not? You're not really looking at that. You're just looking at a pattern.
The way I use yesterday's close is if I come towards it, I'm looking to take some profit there, but that's about it.
All right. So if we get to there, you would get out, right? Or you at least some partial.
At least some, yeah. But that isn't necessarily where I'm entering any shorts.
Okay. I'm struggling with this. It's -2 degrees outside, so I've got
It's
jacket
so
on top
cold.
of sweatshirt on top of something on top of something. And while it was on top of my
When I texted you this morning, I almost didn't want to wake up. It was so
on
cold.
top of my LL Bean -5 below rated jacket, which is bullshit. And it says -5 below, but I'll tell you, when it's in the teens, it's cold in that jacket. It's great when it's 25, 30. But
Yeah.
anyway, I digress. And so, okay, so that's what's going on. Do we have any questions? Any comments? Let's put up the old media assets. Hold on.
One thing I want to point out,
Yeah, please.
that if you see on your chart, you have that big sell-off. And then, so the way I kind of think about it is from the top to the bottom of that sell-off, we're in a box, right? And we're just trading sideways here. This is why I don't have a strong leaning for upside or downside, and I'm trading both equally.
Okay, so let's talk about that for a little bit here. So we're in a box, but we also have a box within a box and a box within a box. You know what I mean?
Mm-hmm.
So how do you look at the relationships between those boxes?
I look at them across different times.
Huh?
I look at them across different times.
Different time frames.
Time frames, yeah. So for me, that you said there's a box within a box. Not in this case. I think there's one box on this time frame, which I think is the 15-minute you have up.
Okay, so then you'd look at it on a 5-minute time frame or something.
I'd look at it on a higher time frame.
Right.
3 hours.
So you wouldn't go below 15, really?
To execute, I would, but not for a bias.
Okay, so you might do it to just tweak an entry, but not really to trade that time frame.
Exactly.
Okay. Yes, it looks like it's coiling. Which way do we go? My bias is a little to the upside because, those big spikes are a two-way sword. Those volatility spikes are a two-way sword. I just think there might be a little potential energy here. I think the market is going to like that he chose Warsh rather than Reader, who I would have, the market might have loved Reader. I would have loved him because he's market friendly. He's he's been CEO of Blackstone for 1 million years. He's made me a lot of money. I've been in that stock for a long time. That's one of my old man put away stocks. The only regret with that stock is that I ever sold some. That gives a nice dividend to boot. So he would have been market friendly, et cetera, et cetera.
The problem too with my analysis here is a move down makes a move up easier, and a move up makes a move down easier. So if you're without that move to follow, we're kind of in this purgatory. So that's where I start to trade smaller trades.
Well, purgatory is good. That's where you sell volatility.
Yeah, that's where you come in. Right. That's right.
Okay. So meanwhile, back at the ranch, here's the Friday to Friday expected move. And after all this, there's a German thing, Strummen something or other, like fire and thunder. we're right back inside the box. I think next week's box, and it's not on the chart yet, but I got it here. Where's next week's box? Come on. Next week's box, 68.20, basically the bottom of last week's box. No, look that, yeah, I think 68.20 and 70.60. So next week's box is a little higher than the week before's box. Remember, week before we had the invasion of Greenland. So 68.20. We'll roughly call it the same, next week's box, and 70.60, which would put us basically the highest box we've had in a long time because of the increased volatility, not necessarily because the market participants are, expecting that. So the box is here and here somewhere. And I always do a weekly iron conduit, maybe flies into that. Always. That's kind of part of the plan. I don't always, I'm not going to sell the expected move. I'm not exactly out of my mind. What I will do, though, I'll give you a brief preview. I'll look at depth view. I'll be doing this. You guys are saving me the work. I'll look at depth view. I'll say, okay, 2-6. Where I got sold calls? 70.60. We got blockers right here. We got blockers at 70.42. So we have some kind of stalling action there. So I would look somewhere in this zone initially. So I'd go above the expected move, and I'd look to see if I can get something at 7,100 or higher. That would be great. To the downside, I need to expand this out. Hold on. Let's go 66, 45. Why 45? Because I want to see the round number. I want to see 66.50. Okay, we got something 68.55. Not a lot, but that's something. 67.35. But we got all this crap underneath it. And not much below that. So I'd like to see if I can duck somewhere down in this area. Below these guys, even if I could. JP Morgan collar roll today. The Mama Bear, I think it's 7,200 contracts, whatever it is, I forgot. Not the biggest one. 72. And so it's executed midday. What they do is they're gonna. I think I put a little write up about it in here. I might not. I put my JP Morgan roll here. Likely minimal impact. Okay, I didn't go through the whole. Typically, even though theoretically it's not supposed to have an impact, typically it tends to have somewhat of a positive impact after the initial trade goes in. Usually, the initial trade goes in, we go down a little bit, then we kind of have a positive impact through a lot of the 230-ish, 3, whatever. And then end of the day, it tends to get sloppy again. What they're going to be doing is, where I put it? I put it in the Discord somewhere. Somebody asked about it, and this is more or less what they're going to do. More or less, they're going to be selling the 62 72.30-ish, pretty much the same one that they sold last time. I'm buying around the 6,600, 55.50. Put debit spread. How do I know? Because they tell you. The best kept secret, because there is no secret. The formula is buy 5% out of the money, SPX put, sell 20% out of the money, SPX put, making a 20% down collar, sell a call to make Mexico pay for the wall, and that's it. Make it zero cost, and that's the trade. Average 9% over the last few years. You could do it yourself, buy 100 shares of SPY, do the arithmetic, do it, and make your 7 to 9% a year, better than a bond. Keep exposure, and that's, this is high net worth people that do this. This is not, a lot of traders like us, aren't kind of trying to get 7% a year, although I don't mind 7% a year for part of my portfolio. Anyway, that's it. 9:15. Okay, any final comments, questions, whatever? Okay, where's SPX? Let's go back to we're back above 30. That's what matters. We're back above 30, 30.50. Remember, we have fishbone. Don't be surprised if we tag a few wide levels here. Okay, I see no questions, so I'm gonna say have a great day, have a great weekend. Like, subscribe, share, retweet, redo whatever it is that the social media world would like you to do if you like me. If you don't like me, then don't do anything. Okay. If you like what I have to say, you don't have to like me. You have to just like what I have to say. Okay, take care.
Bye, everybody.